Hello everybody. Hi. How are you doing today? It's now December the 16th. It's Monday, about 7:30 p.m. Central Standard Time here in Manitoba, Canada. I wanted to apologize for I was trying to edit my last few videos and unfortunately I screwed them up to the point where they were not salvageable. So I apologize if there's one video missing there on my most recent one. But we're going to keep this technical analysis very short and sweet. I don't have that much time. I'm going to be heading to my folks tonight just to spend a little bit of time with them since it is closer to the holidays. And I hope that you are all doing the same as well. It's only about 9 days till Christmas. And as you guys know, I absolutely love the Christmas season. I apologize if I'm speaking in a weird way. I bit my tongue extremely hard and now there's waiting for it to heal. So then maybe in a few days I can actually speak normally where it doesn't cause a little bit of pain in my mouth. So we're going to keep this technical analysis very short and sweet by looking at it from the main indicators that I normally do take a look at it from, while incorporating a little bit of Elliot Wave theory into this as well. What I expected to happen, happened. We confirmed that it is much more bearish than it is bullish. So right now, when we first take a look at the monthly, I live in a city called Winnipeg, and this is the Slurpee capital of Canada. Per capita, despite our weather that can go down to minus 45 wind chill, we will still go outside and get a Slurpee no matter what. It's just in our culture, it's just in our blood, and Slurpees are probably one of the best drinks I've ever had in my life where I will never get bored of. So we take a look at the monthly right now, and the first thing that we see is that we are now contesting a support at this specific moving average, which is the 8, 13, so this would be the 21 moving average. And as you can see, we have fallen below here from $7,100 range, that's where the support was, all the way down to 69.35. Take a look at the monthly's MACD. We can easily see that the momentum in the month of December, my apologies, I thought that something drastic was going to happen right near December 17th. Sometimes we just keep throwing spaghetti at the wall and only some of them will stick. But keep in mind that for the past 2 years, something did happen on December the 14th or 17th. And it's only 1 day away, so only time will tell if we do find some sort of bounce to the upside. Take a look at the MACD right here. We see that it is curving to the downside. So the momentum has been clearly favoring the bears for the past few weeks now. And we're almost 3 weeks into December, and we see that the momentum and the histogram is clearly curving to the downside. So we make a mental note of this, that on the monthly, it's looking pretty bearish. Next thing we do is we will take a look at the weekly chart, where we can also incorporate a little bit of Elliot Wave theory into here as well. We were talking about this last time. We were talking about the differences between two shapes. One would be a concaved shape. Think of it like the opening of a cave door. And the other one would be a convex type of shape. Convex shapes are great because then this particular portion right here can be seen as a function of y is equal to e to the power of x, which is a hyperbolic move to the upside. So this one here is by far one of my favorites, but we don't see them too often. What we do see right here is massive rejection around November the 11th. This is making more of a concave type of shape, as you can see. There's a cave door at the top, coming to the downside. So, with any type of concaved shape, we gotta always be mindful that there is a chance of it not breaking to the upside. So right now, according to the weekly MACD and histogram, we can see it moving to the downside. We get a very, very, very steady and linear drop of our side coming to the downside here. Now reaching around the 40 mark. We see here on the weekly as well that for 3 weeks in a row we tried to break to the upside, but it just did not happen above the 55 EMA. In fact, we got 2 solid weeks of rejection. 1 week, second week, third week did not even get to the 55 moving average. And now where are we? We're trending here in between the $7,800 and the $5,600 range. Big question for me is, where the heck are we going to find support first? And it would most likely be somewhere around here, I would imagine, above 62.50 or 6,200-ish, maybe even to the lower side above 6,000. The 6,000 to 6,200 to me is going to be a fairly significant support. As we can see over here, this support has been established for an incredibly long time. What was previously a support will now turn into a resistance, and what was previously a resistance will turn into a support. So if we take a look at this specific range right there, that we found support for a period of 287 days. That's about 10 months. Fairly strong support, would you agree? Very hard to refute that. So what I'm hoping for is perhaps this moving average moving to the side, and then we could possibly find a support short term. So if we extrapolated this data, extrapolation is taking a little bit of data and just kind of guessing or filling in the blanks, you can say, to see what kind of guesstimation we can make. It's kind of like in mathematics, they say there are those who extrapolate and there are those did you guys get that? There are those who extrapolate, and then there are those who... It's just a joke, guys. Whenever I make that joke, none of my friends ever get it, and I just end up laughing to myself. So right now we're seeing a sandwich. If we use this data right here to extrapolate it, there's a possibility that we're going to land right above the 6K range sometime early next year. If that happens, great. And then we'll get another sandwich of the 55 EMA on the weekly, and hopefully we will continue a bullish run. As long as this moving average, the 200 moving average, is still supporting all the above on the weekly, I'm going to be extremely happy with that, and there's still a chance of massive bullishness in the years to come. On the 3-day, moving down, what we're seeing is a very steady drop still to the downside. We take a look at the ultimate formula of mine for what can make a successive bull run with specific crossovers using the long and the short moving average. So on the histogram, there are two moving averages. Do not mistake in that. One is the fast moving average, which is the 12 usually, and then there's a slow moving average, which is the 26. What we would like to see, ideally, is fast moving average doing something like that, crossing over one time there, crossing back to the downside, and then a third crossover right there that we would try to anticipate. And as soon as we see it moving closer and closer around this particular range, awesome. That's a great formula. And then that will also coincide confluently with something like that on the histogram. So we are getting very, very close to finding some sort of short-term support for now. So RSI, no indication right now, other than still a very steady drop. But what we do see is the curvature of this changing. Was this just a temporary support, or will we actually get a curvature to the upside that will make it look like some sort of convex type of shape? Very interesting time for Bitcoin right now. What we see here as well is that we're moving well below the 200 moving average on the 2-day. On the 1-day, the exact same thing is happening as well, where we're moving to the downside, where there could possibly be a death cross imminently. If this were to happen, where the death cross is where the 200 moving average ends up resisting all the above rather than acting as support on the below side. So right now what we see is the 200 moving average below all of these. It would go from 8, 13, 21, 55, and then 200. And then on the other side of a bearish run, what we would see is the opposite. On the top, we would see 200, and then 55, and then 21, and then 13, and then 8. So if this were to happen, it's going to be nasty. And it will confirm my theory that WXYXZ for Elliot Wave theory will have confirmed that we are looking for the final C structure coming to the downside. So on the 2-day verdict as well, probably bullish, or sorry, bearish. Tried to cross over here one time, 2 times, tried again, failed. Right there, see that? It failed. That means that over the next few days, it's going to try to find some sort of crossover again. But I don't think it's going to happen quite yet. See right here on the daily, crossover once, crossover twice, there's going to be a third crossover somewhere. So we are far away from finding support. In fact, in my opinion, well, not far away from finding support, but we're quite not there yet. When I say far away, I'm talking about in day trader terms, which could be misconstrued for weeks, right? Alright, so now on the daily, what do we see? We see a really high high, or higher low, there and there. But this wick is actually making a, actually, you know what? It is gaining strength right now on the daily. Yeah, it actually is. How can I tell? Because this is a much higher low, and that's pretty low, right? And we're just comparing these particular points right there. So if we compare the same price range, but we look at the RSI that has a much higher low, then we can deduce that it does look slightly bullish on the 12-hour, right? But aside from that, what we got to do is play I Spy with my little eye. I mentioned before that there was most likely going to be a major breakdown. We were taking a look at these particular relevant supports, and as soon as it broke down, we even called the support well before then, anywhere between 6,600 and also around above 6,600, could have been up to 6,900. And we proved that to be true because we acknowledged this particular interim support, and especially this one as well right here. And also this descending triangle was easy to spot a mile away. After the second bounce, that's exactly what happened. We go to a lower time frame, and on a lower time frame, what we see is that it could have very much so been a descending type of triangle type. Just like that, right? 1 point, 2 points, actually 1, 2, 3 points right there. No hesitation whatsoever to come to the downside. And if you take a look at here as well, we completely break below with lots of conviction. And then once it goes to the upside, it gets rejected right around there. It gets another rejection right around there. And then capitulation ended up happening very, very violently with a 4% drop there. And that's a lot for Bitcoin right now, especially considering the very low volatility that we've had. This particular range has been pretty low, I have to admit, okay? Now, if you take a look at the second one as well, we're getting a similar type of formation. We're finding this type of support right here for now because of this huge bull wave that formed a while ago. So if I look at on the daily, there could be a bounce here. We could end up just making a descending type of triangle. But either way, the verdict is fairly bearish in my opinion. I don't think I'm going to have time for an Elliot Wave theory count today for you guys. I'm exhausted right now and I still have to go out. It's very difficult for me to see this as any type of bullishness right now. When I look at this from the perspective of Elliot Wave on a weekly chart, for example, I'm seeing this as like this. W is here. There's the X. There's the Y. There's the X again. And we're searching for a Z somewhere here. That is most likely going to be above $6,000. Bringing it down further, just as a reminder for everybody, the way that we have been looking at this thus far has been very accurate in my opinion. There have been a few alternate counts, but not that many. We saw this as ABC. Where's my favorites toolbar? Alright. We see this right here as ABC. Another ABC with the failed wave. This one we saw it as ABC like that. Whereas this one made a B slightly lower than the previous A. Excuse the annotation and the degree. It's sloppy. I'm a little bit lazy right now. This was counted as ABC there. Actually, no, that was counted as like this. 1, 2, 3. The ABC goes up there. 4, the 5 right there. And now another failed impulse wave to the upside. Very disappointed. So now we're looking for a completion of the fourth wave, in my opinion. I see this as a 1, 2, 3 somewhere there, 4 somewhere there. Either way, still searching for a fifth wave coming to the downside. I'm seeing if this is going to break the 69.26 region. If it does, that'd be amazing. Oh, I apologize, my camera's not on right now. Let me turn it on again. There we go. That should be a lot better now. You can see me actually speak. I'm just kind of twinkling around with my settings. So 1, 2, 3, 4, and I'm definitely looking for a 5. It's just seeing if we're going to get a touch on that weekly chart that I was referring to, right above the $6,600 or $6,200 region. So as it stands right now, we take a look at every single confluent factor, and there's not a lot of signs of bullishness quite yet. Weekly is looking pretty bad. Daily is trending well below, or the 3-day is trending well below the 200 moving average. The 2-day is trending well below it as well. The daily is trending well below it, already had the death cross. 12-hour chart is fairly bearish, still below the 55 and also the 200 moving average. 6-hour, is it bullish anywhere on any time frame? 1 hour? No, it's not bullish anywhere on any time frame right now. Above, not even the 1 hour, not even the 30-minute, not even the 15-minute. Just as soon as we're going to get a crossover there to the upside, even on the 15-minute chart, bam, 3.5% drop right there. Capitulation happens all the time in the market. So as it stands, my bias is bearish for the week. Yep, I have no other choice but to adopt this stance, because I've got no reason whatsoever to even assume that we could get a jump to the upside just based on purely technical analysis thus far. Yeah, very difficult for me to assume otherwise. I see this happening right there. If we get a dip right there to the $6,600 region, bam, that's going to confirm my theory of how the weekly will end up coinciding. This ends up moving just like that. Somewhere maybe right up there. Who knows? Oh, that's 5,700-ish. Maybe I'm not drawing it the absolute best, but I do believe that we can find many confluent reasons soon to see if we can get a drop to 6,300 and above, or 62-ish, that range where I do think that we will find support. Until then, what I've got to do is stay very, very cautious, see if it hits my particular price points. If it does hit those particular price points, I'll be very interested in a long position above $6,200. So I think that concludes this technical analysis video for today. I appreciate your guys' time and your efforts always to always support and encourage me. Thank you very much. And just so you guys know about my courses on Udemy, they're not even on there anymore. No one can access them unless you've had them already. I've already done 4 out of 34 videos for the new re-edited, revised, updated courses 1 and 2. So it goes like this. If you don't have access to it before 2020, you will never have access to it again. And right now, I'm doing a deal for all 3 courses that will be available for download by crypto only, where if you do purchase it, you'll have access to all 3 courses for $180 American. The curriculum is awesome. There's been tons of reviews on it, as you guys know already. 4.75 stars out of 5 with a few thousand reviews. Very well received, and I'm much easier to get a hold of on Twitter. So if you guys are interested in the course, just to learn a lot more about technical analysis from a very educational perspective, where everything has been spoken in a very clear and concise manner, pick it up, guys. Before, it ran for $420 for all 3 courses. Why am I doing this? This is for the holidays, right? I want to remove my course from the internet entirely. Anybody who has access to my old courses 1, 2, and 3, you will get the newly updated ones for absolutely free for courses 1 and 2. So if you've ever been interested in it, now's probably a good time to pick it up. I'm just saying this because I don't want everybody to have my courses for 2019 or for 2020 or any other year from now on. I would like to create this type of scarcity just to make sure that what I have learned is not always going to be flooded on the market. I kind of want to keep things a little bit special and private sometimes, if you know what I mean. So anyways, have yourselves a great night. I hope to see a lot of you guys be more interested in the courses if you have not picked it up already. This way you can get the newly edited one and re-updated one in 2020 when they come out in January. So have yourselves a great night. Take care, everybody. Bye now. Thank you very much for watching this video. I appreciate it.